come the big rig kids, y'all. Are you ready? Let's go. Here come the big rig kids, roll with the big rig kids. Let's fire the truck, take you to such amazing places with the big rig kids. Those helpful big rig kids, see how they give and grow and get to know amazing things. Learn with the big rig kids, and you'll see how it is to have adventure days and hang and play with all your friends. Because the big rig kids know what it is to live a most exciting and inviting life is positive.
Welcome, ladies and gentlemen, to another episode of Conversations with Grandma Polly. That's right. Here we talk about things in life that we need to be more aware of and conscious of, and how to make the world a better place, basically. We have some very exciting and wonderful guests tonight explaining and delving into how to take care of things after you've transitioned and moved on. But before we get into that, let's introduce the one and only that everybody loves. You know her. Come on, everybody. Give it up for Grandma Polly.
Hello and good evening. Happy Thursday. Thank you, Kenneth, for that wonderful introduction. To our audience, we thank you for joining us tonight. Many of us have, we have personally felt the effects of losing a family member. It's heartbreaking when we lose a loved one. And many of you, like myself, have contributed to GoFundMes to help with the burial of someone. We as a family has had to come together in certain situations to fund the burial of a family member who had passed on and didn't have insurance. So we know it's heartbreaking, and it could be the grief that it brings is devastating. Adding to the fact that there is no money for a proper burial, it can at times create unimaginable emotions within our families. It causes a lot of strifes. We have two wonderful ladies here this evening who's going to talk to us about life insurance. They're going to explain to us the difference between term life, whole life, knowing your financial numbers, and how much, we really need as a family when we lose a family member, especially if that person was the primary caregiver to the family. Also, we know today that we are losing our young children really fast. These kids are dying in the street. Some of them are dying from health issues. And many people go through life not purchasing life insurance because they think this child is young. This child is going to be here forever. There are cases where we have elderly family members who are underinsured, who do not have enough money for their burial, and the family still has to come together to help bury these family members. So they're going to explain some of that to us today, because these things affect us as a family, and it also affect us as a community. So without further ado, I would like to take this moment to introduce you to Ms. Sheryl Sanchez and Ms. Nadia Thompson. You guys, please help us welcome them. And Sheryl is going to tell us a little bit about herself before we get started, and Nadia is going to do likewise. Welcome, ladies.
Thank you. Hi.
Thank you.
So, I am actually a retired detective. I retired after approximately 23 years on the job. My personal story, I guess you could say, you think you're a grown up when your job tells you, oh, here's life insurance, sign it. But do you really know the difference when your job tells you to get life insurance? On the job, we have what I've learned since I've been doing this is that there's group life insurance a lot of times on the job. And What they don't tell you is when you leave the job that you cannot take it with you. I don't know if a lot of you know that or not, that you cannot take it with you. So what do you do when you can't take it with you? Do you have life insurance outside of the job?
Okay.
So that's a question for people to think about. Nadia, I don't know if you have anything to add to that part of it.
Well, I'll just introduce myself. As I said, my name is Nadia Thomas. I am currently working. So, I work in accounting and finance. I got introduced to this business a little over almost a year ago on the business side of things. And it came at a time that I felt like it was I started to really realize the extreme importance of it. I had a family member, a loved one who passed away, and because of their, uh, sometimes we say our elderly population, they are sometimes very like not secretive or private about their finances, and so unfortunately, at the time of their passing, I learned that they had nothing in place. They had no will, they had no insurance, they had nothing at all in place. And so it was really a situation where I had to come out of pocket. My family members had to come out of pocket, and through some generous donations of close friends and family who knew the situation, who donated to at least help me place them, to rest. And so during that time is when I went back to get insurance for myself. Not that I had before, but I had to wait a period, and then I went back and got insurance, and really realized the importance of it. But it was so heartbreaking to know that we couldn't really even grieve properly because we were so focused on how were we going to lay them to rest. Um, in a decent manner, and I see this so many times. So that is how I got into the insurance business. I'm very passionate about making sure that we are making sure that our people are insured properly and sufficiently, so that unfortunately when God calls somebody home, that you can grieve without having to worry about how you're going to handle expenses. And so that is why I got into the business.
Okay, you ladies have made some very valid points. And now we're going to go into explaining the difference between term and whole life. Could you tell us what term life insurance is?
Well, actually, I want to start off with whole life first, if that's okay.
Okay.
Um, so generally with whole life, um, you're able to build a cash value, is what they tell you, and that you can borrow from it. But the rate of return when you're building this cash value is generally only 1 to 3%. And when you borrow from it, you're pretty much borrowing your own money, but you have to pay it back at a rate of like 6 to 8%. So why are you paying back your own money at that interest rate? That's a question for people to think about. And then the other thing is, if you don't pay it back and you pass away, they subtract it from your face value. So I can tell you from personal experience, I've known people that have passed away and borrowed from the policy, and their body had to be donated to science because the policy did not pay out. Um, because they borrowed from it, and nobody knows when they're going to die. And this was just a fluke, and they passed away, and they thought they were going to be able to pay this money back before they passed away. Weren't. So the family's stuck and have no money to bury this person, so they had to donate the body. So with whole life, like I said, if you borrow from it, you have to back, or else the policy is not going to pay out the full face value. They subtract it from it, and then you also have to pay it back with an interest rate. Term life is always going to be cheaper because your term is only for a set amount of years, like 25, 30, 20 years. Any money you take out of, you can actually invest the difference because it's cheaper. So I don't know if Kenny can pull up that screen.
Okay. I'll pull up that screen for you.
It's easier to explain. So on the left, is it? Yeah, my left, we have a whole life value where John and Mary, a married couple, age 35, they take out a $100,000 policy each, right? And what they're paying for this policy is $225 a month. The cash value that they would have built up after 30 years, $6,880. That's after years. This is how much they would have built up in the cash value. But you're paying $225. Whole life is for your entire life. So this is what they're paying for their whole life. Then you come over here to term policy, where John and Mary, for example, take out $250,000 each, more money on the life insurance policy for 30 years, and they're only paying $80 a month. So the difference between the 80 and the 225 is $145. And what we would do is take that $145 and put it in an investment. So at the end of their 30-year policy, they will have built up $265,457 in their investment account. So what they're doing is they're buying a term policy and investing the difference. You're keeping your money separate from your life insurance. You don't want your investment and your life insurance in the same pot, basically. When you keep them separate, and here, after 30 years, $265,000, that's more than the actual policy that will have built up. So you're pretty much self-insured. You can self-insure yourself with this amount of money. And the other part is when you invest it, it grows at a higher interest rate. Over here, it was 1 to 3% on the whole life. On the term, if you invest it, the interest rate that it would grow at is 9%.
Wow.
So you can see the difference between whole life and term, buying term and investing the difference, or whole life where this cash value is sitting here that is only able to be used while you're alive. Now, if you pass away, that's the other thing with the cash value. If you pass away, what do you think happens to this cash value? Do you think your family gets that money?
Wow.
It doesn't. They don't. That money goes back to the company as, what do they call it? Unpaid premiums.
Wow.
So the only, if you don't borrow from it, the only your family would get is $1,000.
Wow.
So that's pretty much the difference between whole life and term.
Okay. All right, Sheryl.
Yeah. I don't know if we have any questions from anybody or anything like that.
Renee, say anything?
Right there. Because a lot of times people go out and buy insurance
Pardon?
and they don't really understand what they're buying. And you explained that pretty well. And I see a yes. Is that Carol? Carol, do you have a question? Or you was agreeing to what she's saying? We'll wait and see what Carol says, but there was another point that you made about having insurance, working on a job, which is a group insurance. And I'm familiar with that working in the trucking industry. And most of those big companies like that, they're not even involved in insurance companies. They under that term and what you used, self-insured. They would pay out if somebody died or someone was in an accident, but it wasn't directly that they had a policy on you through some insurance company. And if they did, from what I understand, I cannot say that this is guaranteed, but because their policies are so big, they have larger policies on you to even when they lose someone who was working for them. Just like you said, they get part of that money also, you know. So we need to know these things. And when I left the trucking company, the life insurance policy that was on me did not transfer over with me. That definitely did not transfer
Right.
over with me. There was another situation where there was a person who retired from a job, and in their retirement, all of this stuff was supposed to transfer over with them because they got sick first and they were on disability. Then, when they reached the age of retirement and went into retirement, they still thought they had this insurance. But then, when that person died, the insurance did not pay anything. And you and I had a conversation last night, not knowing the full details of it. But there was a 13-year-old kid that died, and the parents had insurance on him, but the insurance company did not pay off. So even when we think we have insurance, we need to get the full understanding of what it is that we have, because we can get stuck just like so many other people that I've known at least 3 people who had policies when they died, and the insurance company did not pay off.
Wow.
For sure. Right.
Group
There's
term policies are not
insurance
owned by
companies.
us; they're owned by the companies.
Mm-hmm.
The companies own them. So if you leave, if they terminate you or the business closes, then that no longer applies to you. Or as you mentioned in your example, where somebody retired out, you don't have insurance beyond those that level of employment. So we, like you said, we're all believing that we're covered. You know, I hear it so many times. They'll say, "I have insurance with my job." If your job folds tomorrow, or they say, "Hey, thank you for your service, but no, thank you anymore," you're not covered. And then you could, Lord forbid, you could walk across the street and get hit by a car. Nobody's paying out on that policy. And in term policies, they will allow you to add dependents, but same thing. They're not covered once you're no longer employed, the doors close or anything, and they can decide, hey, we don't want to carry group term policy for our employees anymore. So you have to, like you said, you have to know what it is that you're getting. Cheryl said it in the beginning. We think we're grown and we're doing right things, and we're big men and women now because we got insurance through our job. It's not the same.
It's a really good point. And Cheryl, you and I, when we spoke about you coming on, we also talked about financial numbers. Can you break down the
Yes.
meaning of financial numbers and how that works?
So it's called a financial independence number, and a lot of people don't even know what that is. Um, I'll tell you, the definition is the amount of money you'll need to accumulate so that someday you can live off that money for the rest of your life and never have to go to work. That's what the financial independence number is. So say you want to retire in like 30 years with $30,000 a year. 30 years from now, after like 3% inflation, $73,000 spends like today. Your financial number would be $1,080,000. To get there, you would have to invest $585 per month, for 30 years at a 9% interest rate in order to get that number.
Wow.
So people need to figure out what their financial number is.
Yeah.
Go back and say all of that again because you're breaking up. I want them to really get the understanding of this.
Don't forget
your financial, huh?
I was saying, don't forget that your financial number is determined by your estimated costs as you get older. So it's not just like, oh, hey, I want to have this much. It's like, do you have a mortgage? Will it be paid off at that time? Do you have, those different things when she breaks down that number? So.
Gotcha.
Right. Everybody's is going to be
different. Did you have the rule of 72 screen?
Yeah. No, he does not have that.
He doesn't have it. Okay.
Theory of I can show the theory of decreasing responsibility, Penny.
Decreasing responsibility.
Yeah, the other screen with the wavy. So this is how life works in general. When you're younger, in the early years, with life insurance, you tend to need a lot more than when you're older. You need a lot more in the younger years because you'll have younger children, your debt will be higher, you may have like a house mortgage, and if you were to pass away at that age, loss of income would be devastating to your family. So moving on, as you get older, onto the other side of the screen here, it's my right side, sure, is your side, but in the later years, you will have time vested in your job. Your children are grown. You're looking to retire, so the only income you'll need is pretty much retirement income. Your mortgage should be paid off, if not pretty much paid off. Your debts will be lower. So the need for insurance is not as great as when you were younger. This is what they call the theory of decreasing responsibility, which is why we believe in term life more than we believe in whole life policies. Because why would you need that amount if your responsibility is less when you get older? I'm not sure if I'm explaining it that's understandable, Grandma Polly.
That you need because your debt ratio is high. As you get older, your debt starts to decrease. So you should not need as much as you did when you were younger. I think that's exactly right. That's what you're saying. Okay,
can I add to that?
I can't hear you coming in kind of fuzzy.
I said, can I add to that?
Yes.
Oh yeah.
So what she's saying is that when we're younger, like she mentioned, we have, let's just take a young couple. They got married, they bought a house, they have children, right? They rely on each other's income for the most part, and the loss of one income would be devastating to the household, meaning they may have to sell their house. They can't, the other spouse can't afford it alone. And then you got to think about the cost of raising children over years. So when we say buy term, because I'm noticing one of the comments is that we buy term and we're taking what it would cost. So if you're 25 buying term versus whole, it's going to be cheaper. You're going to take that money and you're going to invest it over that 30-year term, right? And so as that 30-year term is happening, what's also happening is the kids are getting older, the mortgage is getting paid. There's, like you said, the debts are going down. But at the same time, you're almost putting yourself, if you've been investing over 30 years, at the 9% or higher, you've now built a nest egg where you no longer need term. So you may not need to renew your term insurance at the end of that because you don't have the mortgage, you don't have young kids in the home, you don't have all those expenses, and you've also self-insured yourself. So that's essentially why we need more when we're younger, less when we're older. Did that help a little bit?
Yeah, I get it.
Yeah.
Kenny, you want to run that number across the bottom? There was a question: what can be done if a
Yeah.
person had insurance and then updating policy, they are not able to get insurance because the person has a drug use?
I would
That
have
one
to know
yellow?
more because
Yeah.
yeah, why did the policy stop? Like
Because it was one of those policies that you talked about where you pay X amount of years and then you reach that year limit
it was a term.
and you
Well,
have to renew it.
Okay.
so
Yeah,
typically
I'm
when
not
you
sure if that's
right, I don't know by that question, but typically when you hit your 30-year term,
Mhm.
so typically the way it works with where we are is that if you have a 30-year term and you've hit that 30-year term, you are able to renew it without a medical exam. You will get renewed at a higher rate just simply on age. So they may not make you take a medical exam, but they will renew your policy based on what age you are now versus 30 years ago. If somebody let a policy lapse and they're trying to get it renewed, they are going to make you start all over again with the application, and depending on how long that lapse has been, right? There's some grace period in there, but if it's time, they're going to make you do a medical exam again. They're going to make you go through that process again. And I know with our company, if you have illicit drug use in your blood work, you will be denied a policy. I say that across
ins-
the board.
insurance is basically based on risk, and they're taking.
Right.
Will you run that number across the bottom? Michelle, I need you to call in.
Oh.
Yeah. Michelle or anybody
Insurance is
else,
based.
but I need you to run that number so that she could get this. Michelle, that number is going across the bottom right now. And it's 478-204-271. Let's see if she'll call in because she posted a situation there. 478
So
202 4271. And while we're waiting, a lot of times, we sit at home and we see these insurance commercials come across the TV, and people don't read the small writing there. I know there is another situation of a young lady that I know. She had a policy where when she bought it, the policy had to be effective for 2 years before it would pay out anything. Her husband died 2 weeks prior to meeting that 2 years, and there was no coverage at all.
Yep. It's important to read the policies and the riders that are in the policies. So a lot of times when we meet with our clients, they will say, "Oh yeah, I have a policy," and we'll say, "Okay, well, let's compare apples to oranges because our policy 9 times out of 10 is better because we don't have specific." A lot of times, insurance companies will have specific riders, like you said, that won't pay out before 2 years. Ours will only, for us right now, it's If you were to die by suicide before 2 years, they won't, right? And like Sheryl mentioned, it's by risk. So insurance is assessed by risk. They're insuring you based on a risk level that they've kind of assigned to you, um, based on your application, your medical, all of those things. So there's questions that are asked, you know, and it's assessing that risk because they have to make sure that we don't go out of business and we can insure people and actually pay out on those claims. But each insurance company is different, and it's very, very important to read the riders on your policy before you sign it, because you do have what's called, Cheryl, correct me if I'm wrong, it's like a free look period
Yes.
on your policy, where your policy will be issued and you can review the policy. You can take it to another insurance company and you can go line by line. If you don't understand it, or if your agent hasn't explained it to you, you can go line by line and look at what's in that policy that could potentially, not pay you out. You know what I mean? So, and sometimes they'll tell you, based on a health condition, they may give you a specific health rider. We'll pay you out, but if you pass from this specific, I don't know, cancer, we won't cover you. So you have to just really kind of look in the weeds of the policy and really sit down and have your agent talk you through it.
So the term
It's,
that you just used, did you say health rider?
Yep, there can be a health
clauses.
rider in there. They're clauses, they're riders. I know I have a health rider just because I am a cancer survivor. So I know I specifically have a health rider. So they
Okay,
will
could you
say,
explain though? Because I hear you use that word, but when using that word, could you explain what a health rider is?
so
Because
basically
there's
it's
people out there who don't know.
right. So basically, this is let's just say this is your policy, right? And this is everything in your policy. And somewhere in that policy, there will be a rider, or a paragraph or a clause right here, or maybe it's attached. It's another sheet of paper that's attached here, back here, that says these, if you were to pass with this specific thing or under these specific um, or circumstances, we will not
Requirement.
pay out on the policy. A rider could also be like, hey, we approved you. Someone can have diabetes. We approved you, but um, you're instead of paying this much on your monthly premium, you need to pay this much on your monthly premium. So there's when I say riders, they could be whether it's based on a certain clause under which you will or will not get paid out, or it could be about your premium, the cost, because we will quote you, and then when it comes back, it can say, hey, we did it on an increased premium. We'll insure you, but it'll be an increased premium, and you have to agree to that. So that's what I mean, because it'll be a specific statement or clause in there.
So in other words,
Did I explain it right? I explained it right.
so in
Yeah.
other words,
So like
what I'm understanding when you say that, in other words, I can go out and purchase life insurance, but there are certain things and certain conditions that I may have that I'm dealing with that they will exclude from that policy. They will cover me for certain things, but if I die from this particular thing or that particular thing, then the policy is now and gone.
And like I said,
it just
it's
depends on the
very
company.
individualized by insurance company. So our company is not as we don't you're not going to see all these clauses, right? Specific clauses like that. There are some insurance companies specifically that they will say, yeah, we'll insure you, but if you pass from this, if it's related to this, then your policy will not pay out.
So some of it is conditional. And that's another thing that we need to know as a people when we're purchasing these policies. We need to know everything that's covered in that policy from what's not covered in that policy. Because we will be paying this money, and at the end of the day, it was just money that went into a policy that doesn't even protect you.
And we do a free financial analysis. We do review policies and show people what their policies. Like some policies may have an act of terror clause where things like 9/11 or Sandy Hook or something like that, they won't pay out for. The company we contract for, they will, or like you said, the suit. What's that?
I want to stop you there because we have a question. It says, now you put all this money into this policy, and then now they're not going to pay, they're not going to make good on that policy because of certain conditions. So, in other words, this is just money that the company made, and that's money that you'll never be able to get back.
Correct. Think of it like car insurance, right? If we all pay car insurance on our vehicle. If we never get into an accident, we don't get that money back. So it's the same thing. You're insuring your life. So what happens, and when we say buy term, right, we're buying it for a certain term, because our goal with our company is to get you to a place of financial success, and to get you, we don't just give you life insurance and then leave you be. We're like, okay, what's the next step in your financial journey? But if you think about it with car insurance, you I pay car insurance. I've been driving for 30 plus years, and I don't get that money back if I don't get in an accident. It's the same thing. You need to understand. That's why we say you need to understand what's in your policy before you sign it. You need to read it, look at it, understand it, and compare it. And like Sheryl mentioned, we give you a financial needs analysis. We will review your current policies with you if you have a policy. 9 times out of 10, we will have our clients will switch over to our company, because when you start to go line by line and really look at what's in those policies, they give us documents that are like this thick, and this is your policy, right? Reading. But your insurance agent should go over that with you, and you should ask 50 a million questions as well.
Agreed. And this is the reason I have you ladies here tonight, because insurance affects the family, whether it be little people, old people, or whoever in between. And we, as a people, we still have to know we have to, within our village, we have to make sure that these things are covered also. And we're having this conversation because there's people out there who's never going to meet the Sheryl. There's people out there who's never going to meet the Nadia. They're going to run into other insurance agents. And having this discussion so you guys out there will know what to look for in your policy. Just don't take the word, sit down and read it. The habits of signing contracts. Would you sign a contract without reading it? So the insurance policy is a contract. You need to read it, and you need to know what's in it, because there are some things that may not be covered. And like with Michelle, what she put up there, she couldn't renew the policy. Well, whoever it was couldn't renew the policy because the policy it reached its term, and the person got into drugs, and they could not renew the policy. Now, I'm quite sure, and you guys correct me if I'm wrong, there are still companies out there who may create policies, but it's going to come at a higher rate because you're at a higher risk.
Right.
Okay.
It's all based on risk.
And that's the biggest part of it, risk.
Right. I see the question
Okay.
about young children. I know for us, if you get a policy, our our child policies, it's basically buy one child, get one free. So you're paying one price for one child, and if you have more than one child, they're covered also. So typically 10 to 12,000. It just depends on how much you want to spend on your child's funeral. I hate to put it that way, but our child riders are, you pay for one child, and say you have 5 other kids, you're only paying for one. I don't know how other companies work, but you're paying for one and you're getting the rest free. Huh?
And if you have young kids, do not let an insurance company, young kids or young grandchildren, do not let an insurance company tell you you need $50,000 of whole life insurance on that child. If
You just need enough to
even
bury
if it's 50,000 of term, or it's a child rider, right? So our policies are term. You have to just think, like you said, Lord forbid the Lord calls you home, your child home. How would you like to, bury your child and take care of those expenses? That's what you consider when you put on the child rider. What happens too is that when they turn 18 or 21, Cheryl, it's 18, right?
Oh, for our child, no, 24 and a half.
24
For
and a
our
half.
child riders.
Right. No, they're covered, but they can convert at age, they can
24
convert
and a
to
half.
their own at age 21. So,
Okay, that was going to be the next question I asked. When we talk about insurance for children, Cheryl broke down that with it, and you did I freeze?
Yeah.
Yes, you did.
yeah.
I think we froze. Kenny, can you hear me?
Yeah. You're good. We see you.
We can
You're,
hear you now.
Yeah, we can hear you.
she froze.
Can you hear me?
Yeah.
Can you hear me?
Yeah.
Yes.
Going out,
I think we lost Nadia.
back in.
Renee, we can hear you.
Can you hear me, Kenny?
Yes. Something wonky. What? She didn't hear me?
I think we lost her.
Okay, I don't know what happened there. Could you guys hear me?
Yeah.
Yes.
We heard you.
Okay, we froze. So I was asking, when we talk about children, and Cheryl touched, one of you guys touched on it a little bit. How high does the age go up? When they consider them children, when my kids were younger, I got into the Gerber thing until they became a certain age. So when you say this, that all these kids are under one policy, how old is it before they have to convert?
They're covered up to 24 and a half.
Okay.
Mm-hmm.
So
But
when
if they
actuality,
want, I think if they want to convert to their own policy to get more coverage, they can do that. I believe it's either 18 or 21. I can't remember. I think it's 21 or 18. I can't remember. I have to look that up. But yeah. So that's it. Like Cheryl said, they're covered until 24 and a half. But if they want to say, like, for example, my grandchildren, we have 15,000 on them, right? But now they're 21 and they want to convert. They're like, well, listen, I want to get my insurance policy because it's best to get it while you're young. They want to convert it over and now increase their policy amount. You can do that at age 20, 18 or 21. It just depends on the company.
okay, it depends on the company. So you guys have given some great information here tonight, and we have like 9 minutes. So I'm going to let you guys wrap it up with your final thoughts. And there is someone out there asking the name of your the company that you guys are with, Cheryl. So now is
Yeah.
your time, where you could give your information and the things that you do with that.
Okay. They can reach out to myself and Nadia privately. I don't know if Kenny is able to.
I can do anything.
Pardon?
I can do anything.
You can put our emails up there.
Yeah.
Um, Mine is Sheryl
Hang on a
Sanchez.
second. Let me just pull this up right quick.
Okay.
But you can tell the lovely people all about yourself.
My email to reach out to me is SHERYLS2806 at
Q.
gmail.com.
No, 2 is in the number 2.
Okay. 2806.
Right. We don't work for a company. We're independent contractors.
Right. And then my email is Nadia, Nadia,
Okay.
Sierra.
Just hold on
Okay.
1 second. Nadia.
Nadia, Sierra, Sierra. Dot P is in Paul, R is in red, I is in ink at gmail.com.
I get that right?
No,
S.
sorry, it's a S.
Sierra.
Not
S.
Sierra
Oh.
is an S.
Okay.
Like Sierra Beverages.
Sierra missed.
Yep, that's it. Pull it up
So
a
they
little
can-
bit because it's blending in
Yeah.
with the.
It's
Pull it up.
blending in. Great. Yeah. Hers too.
Pull it up.
Yep. There
Yep,
you go.
that's good. That's good.
So they can
So
reach
we're
out to
independent
us,
contractors.
and we can do a complimentary fee, a financial analysis. We can let you know. One thing I learned: how much insurance I actually need. Everybody's situation is going to be different, so we can do that for you to figure out your exact number of how much insurance you would actually need. Not just throwing a number out there like, oh, you need $500,000. No, there is an amount based on certain criteria that you would need. So we can do that for you. And also, if anybody's interested, we are aggressively expanding. Um, we work from home, part-time, licensed by the state. We also have information on that if anybody is interested in becoming a licensed agent. What else? We also are in the process of getting our investment license to do the other piece of this, where investing the difference between what I spoke about, buying term and investing the difference. We both are on our way to doing that. So basically trying to be like a one-stop shop for all your finances. I don't know if you have anything else to add, Nadia.
No, not really. I mean, I think if you are even thinking about life insurance or you don't have life insurance outside of work, I mean, if you don't currently have life insurance outside of work, definitely reach out to one of us. We're more than glad to help you along that process. Time is not promised to anybody. We all have had situations where um, as Grandma Polly mentioned in the beginning, we know somebody who has passed away and we're doing GoFundMe's to help bury them. So we want to get you, the proper coverage as quickly as possible. Um, and then I'm trying to think. And then even if you have a policy, we also, like as Cheryl mentioned, we can do an apples to apples or apples to orange comparison on your policy to make sure that you don't have these clauses in there, that you're getting the best policy possible. I did a call with one of my new clients, um, and we did the financial needs analysis number, and they were shocked right? Because their policy was this big and their financial needs analysis number was here because they're a young couple, just got married, just had a baby, just built a house. And if one of them lost the income of the other spouse, it would be devastating. So when we had that financial needs analysis, we that number was shocking. And so when I gave them a quote on a policy, um, what they did was they said, okay, let me talk with my spouse and let me think on it. And because they were bundled with a car insurance and something else into one policy with their life insurance policy, their agent came back and said, oh, hey, well, I can do that same policy and keep it bundled with your car insurance at this price. And my question to them was, if your insurance agent was really in serving the best needs or best interest of your needs, why didn't they come to that number and do that financial needs analysis in the beginning? Right? Because for a lot of these, so are we done? I'm sorry.
No, oh, no, no. I was doing that for. It was a great
Okay.
point.
So that was my question to them, and they had to really think about that and say, you know what, you're right. And as Sheryl mentioned, we are one stop. So not only can we get you life insurance, we can move you into investments. We also have vehicles and tools where we can shop around your car insurance, your home and auto. I mean, your home and auto, and get you
Legal.
not six out of 10 times we get you better pricing
We
because we
also
shop
do
around about 36 different companies. So
Awesome. That was a great point you made. Why didn't they do that in the beginning? You know.
yeah.
mhm.
So we do 401k plans for small businesses. We do annuities so people don't run out of money while they're in retirement. We do managed investments for some of our larger clients. And then to prepare for retirement, we do mutual funds through some of the premier people in the investment industries. The name of the game is retirement. It's not a number, it's an amount. So if you have enough money, you could retire tomorrow. We
Correct.
also, we also provide legal protection through a couple other companies. So basically, dealing with wills, estate planning, and other legal issues. And
ID
then,
theft, defense, all of that.
and like she said, also we do our home solutions through Answer Financial and Vivint. So we're like a one-stop shop, basically, for all your financial needs.
Well, you guys have shared some awesome information here this evening. And like I said before, even though my thing is children, but my thing is also families and communities because these children live in families. So
Well,
we have to make sure everything, is covered and taken care of and secured. Because a lot of times we as a people, we just figure we have forever and a day to live.
well,
We
you
have
also
time to get this. We have time to take care of this. We
Mhm.
have time to get this done. And within the last couple of years, we see how the world just turned into a whirlwind with this COVID thing. And not only were elderly people dying, but we had young people, middle aged people, children, and everything else. But we get that mindset, oh, we have time to work on this. We have time to get this in order. And we have time to fix this. Instead of procrastinating, I say, stop procrastinating, get your business in order, and take care of what needs to be taken care of. And with all of that being said, I just want to thank everyone out there in the audience for joining us tonight. I give a special thanks to Sheryl and Nadia because you guys brought some information to the table tonight. I learned a few things here. And the special thanks to our sponsor, KJ Multimedia Solutions of Marietta. Special thanks to TNT Realtor of Marietta. And once again, I cannot express the importance of the village. Check on your elderly, folks, make sure their stuff is in order because if it's not, when they leave here, you're the one who's going to have to come up with these funds to bury them. If you have children, ensure these kids life is not promised to anyone, and we're losing our children left and right to the streets right now. We're losing them from illnesses. You know, age has no number. God forbid you have to bury one of your children, but age, death is not a number. We all came here. We know we're here and we know we live in, but one thing for sure, we know one day is going to come where we're going to leave this earth also, and somebody's going to have to bury us. We all have that appointed time. We just don't know when and we don't know who, but it's coming, and we have to take care of those things. And now I want to get back to this other reminder. We started this to create these conversations to bring awareness to things that's going on in our community. But we also love highlighting our young people. You know, a young person out there that's doing great things in their community, who stands out in school, have them contact us. We would love to bring them on the show and have that conversation with them.
Jordan.
Because the news media itself, we see the negativity. We see old little Johnny done shoot big Bobby down the street. This one then did this and this one done did that. And that's just a tad bit of the kids. We have brilliant kids in our community. We have kids who are doing extraordinary things. And we would like to highlight them. And with all of that being said, hey, we look forward to seeing y'all again next week, Thursday, from 7 to 8 p.m. And one more thing before I close out. Y'all who bought my book, study it, because we're going to have a trivia night and we're going to give away prizes. Do that. My next book, I wasn't going to put it out there, but I got to put it out there because now I started talking about it. We're going to start dealing with the dangers of the internet. We're going to have that conversation, and who better to have back than Sheryl? She was investigating, you know? So we're going to bring her back and have that conversation very, very soon. And I just want to thank everybody. Thank you, Kenny, for the wonderful work you do behind the scene. It couldn't be done without you. I love you guys. Sheryl, don't y'all leave when the music starts. Peace out. See y'all next Thursday.
Come on. See y'all next Thursday.
Here come the big rig kids, roll with the big rig kids. The sci-fi little track to you to such amazing places with the big rig kids. Those helpful big rig kids, see how they get and grow and get to know amazing things. We're with the big rig kids, and you see how it is to have adventure days and hang and play with all your friends. Because the big rig kids know what it is to live.